Welcome to LSBF TV. There's a lot of letters there, I almost forgot what the name of it was. LSBF TV. My name is David Laws, and my lovely new AAT t-shirt. I think you'll agree it's very fetching. It does make my arms look a little bit wussy though, a bit wimpy, but there you go. I didn't choose them. The plan for this afternoon is that we are going to be working through task 3 of our, I wonder where I'm there, that's what I wanted. What's it, of the CTRM. So we're going to slowly work our way through task 3. Now the key with any of these tasks is to make sure that you do what it tells you to do, that you don't try and rush, you do things slowly, you do things carefully. So one of the things that we need to bear in mind, when you have a cash outflow, you need to demonstrate that it's a cash outflow. You need to put brackets around it or a minus sign or whatever you're told to do. So you need to be very clear that you're following the instructions. One of the other things that you're normally told is don't round anything. So you're normally told to round things to the nearest pound. So again, one of the things, if you read through the examiner's reports that AAT use, one of the things they'll often say is that people just don't do what they were told to do. Doing these exams is hard enough without making it more difficult by ignoring what you're told to do. So we try and make sure we do that. Now we've got the fact that we're going to work our way through a cash budget. Some of the figures you can see we've already got. Some of them we will need to fill in. And we will also, you can see down at the very bottom, we will need to think about the opening and closing bank balances based on the net cash flow. So we're going to work our way through nice and slowly. To be honest with you, there is one tricky little bit coming up, but most of them, to be honest, it's simply reading it very, very carefully. Probably reading it 2 or 3 times to make sure you're absolutely clear what's going on. And also, and I made this mistake when I first looked at this. In my own defence, I was looking at this first thing in the morning, and I hadn't had my cup of coffee yet. And there's a couple of them, and I misread which month it was talking about. There's a couple of bits where they tell you about months which aren't actually relevant. So we just need to be careful what it says. And again, I suppose what I'm saying, I know exams are stressful. I've been there, I've done it, I know how stressful they are. But you've got to try, with a paper like this, where it's very much attention to detail. Paper like this, you've just got to try and slow yourself down and not jump to conclusions. You can't afford to say, oh, I know what it says, because it might say something different to what you think it's going to say. We'll see how we go. So, first of all then, so we have got a partially completed cash budget for months 1 and months 2. And they basically want to look at what the net cash flow is going to be. Notice it's all budgets, none of it is actuals. That's all budgets. Right, so the first thing then, I'm going to work through these in the same order that we've given them, simply because it's easier. But you don't have to. You can do it in any order you like, but one thing you ought to make sure you do is you tick things off as you do them so you don't forget anything. Right, the company let out part of its premises with effect from month 2. The rental charge is $51,600 per year and is payable in equal monthly instalments on the first day of the month. Right, so we will have then some rental income. What will the rental income be? It will be $51,600. That's for the year. We're doing this per month. So in other words, that will be $4,000 4,300. All right, so we put that in our cash budget. Rental income, 4,300. 4,300. Nice and straightforward. Except, I'm sure you've noticed, that's wrong. What's wrong is this is what I did before I had my cup of coffee. I didn't read it carefully. The numbers are fine. Nothing wrong whatsoever with the numbers. The problem is what it actually says. It says that you did the rental from month 2. So what I have done in month 2 is absolutely correct. It's just there isn't anything in month 1 because we hadn't rented out. Now it says also that the payment is due on the first day of the month. So the first day of month 2, we will get the 4,300. If it had said, for example, that the rent was paid 1 month in advance, well then that might change. If it was, so it might then mean we do have something in month 1. If we were told they pay 1 month in arrears, they pay 1 month later, then there wouldn't be anything in month 2 either. So you have to be really, really careful. And when I was having before I had my cup of coffee, I didn't notice that. So I got that bit wrong. But we haven't got it wrong together. That's the main thing. So 4,300 is rental income in month 2. There is nothing in month 1. Let's look at the next one. And the next one that we've got, it says the company has got £2 million invested in a fixed rate account paying interest of 3% per annum per year. Companies elected to have this paid monthly. So we've got the investment income. Now the investment income then, we will earn 3%, but again that's per year. We want the monthly income, and so that comes to 5,000. This next bit you may think you don't need to worry about it, which is fine. I have seen lots and lots and lots of students getting percentages wrong in the exam. So there will be lots of people who will do 2 million times 3. Not 3%, they'll do it times 3. So just be careful with percents. This one, 3% shouldn't be too bad, but particularly if it's something like 0.75% or something like that, it's very easy to get mixed up as to how many decimal places you need. So just remember that percent means divide by 100. So I know for some of you will think, no, I don't need, this is so obvious, David, I don't need to worry. But I would always do that in the exam. Just to make sure I'm doing it properly. 3% means you multiply by 3 and divide by 100. Yeah, the worst thing in the exam would be to fail because you make a silly mistake because you press the wrong calculator button. That would be a really, really foolish reason to fail an exam. So if you're happy with 3%, fine. But I know it sounds strange, but I've seen so many students in real exams get percentages wrong. And it's often because they forget it's a percent. They just do 2 million times 3. Or they think 3 over 100, that's 0.3. Or 0.0003. They get mixed up. So just do it let the calculator do the hard work. Times 3 divided by 100. And then you'll be fine. Yeah. Now remember we were told that this was per annum, per year. That's why I've divided by 12. If we were told this was the monthly figure, then obviously we wouldn't divide by 12. If we had been told that they get all of the interest in month 1, or more likely they get all the interest in month 12. So if you invest for a year, you get all the interest and you take it all in one lump sum at the end, then it wouldn't make any difference for month 1 and month 2. There wouldn't be any cash inflow. So again, be careful. It's 3% per year, not 3% per month. But that means it will be divided out monthly. Just be careful. You could have a question that says they have it all at the end, in which case there is no cash inflow. They've earned it, but they haven't received the money yet. So cash budget's when you get the cash. Okay then. The company received payment for the sale of a non-current asset. This one is slightly tricky. Slightly tricky. Now, what's the obvious answer? The obvious answer is they made a profit of 14,000, so the cash flow. Oh, I didn't put the 5,000 in there. I have no excuse because I have had some coffee today. So the obvious answer to do is to put 14,000 in there. It says we sold it for a profit of 14,000. Now again, I hope you've realised that's wrong. What's wrong about it is profits are not the same as cash. What we want is we want to know how much cash we received. Now, if you remember, we've got the way that you work out a profit when you sell a non-current asset. Your profit will be equal to the sales receipt, which is the figure we actually want, minus the net book value. Yeah, the way you work out the profit is what is the value in our financial statements, compare that with the cash that you actually got. Now we know what the profit is because we're told it. We're told the profit is 14,000. We don't know what the sales receipt is. That's what we want to work out. If we have the net book value, then we can work out the sales receipt. It will be whatever number makes it all add up. Right, so the net book value. Let's see what it says. It says the asset originally cost 96,000. So originally it was in our financial statements at 96,000. It's been depreciated by 50%. So in other words, the net book value now is going to be 96,000 times 50%. It's now going to be in there for 50% of what it originally went in. So in other words, that's 48,000. So however much we actually received is £14,000 more than the net book value. Well, if you do a little bit of algebra, I hate to mention algebra on a Friday afternoon, but that means that take the net book value, add 14,000 on, that must be what you received. What you received must be 62,000. And again, just a quick double check, the profit is how much extra you got. Well, if we sold it for 62 and it cost, it's 48 in our books, the profit on that is 14, which works out. So 62,000 is the sales receipt. Remember, it's a cash budget, not profit and loss. Right, we did that. I put that in month one. Let's just hope that I was correct. It was in month one. Phew. Nothing happened in month two, at least from the point of view of selling things. So that one's done. And I'll just put a little dash in there. Okay. Total receipts, if we add that up, and to be honest with you, I would only do this at the very end, personally. Anything to do with adding things up, I would always leave it right till the very end. 8739,444 in month one, and in month two, 8852,972. The only reason I would leave it till the very end is you're not, all you're doing is proving you can add things up. So I would normally do it right at the very end, but just for the sake of completeness here this afternoon, get it done. Now we can forget about the receipts. Now we get to the payments. We've got purchases, they've already been put in. We have got wages and salaries, they've already been put in. General expenses have already been put in. The next thing we're told about is the purchase of a non-current asset, and that purchase is in month two. There'll be nothing in month one. So let's look at the purchase. So the company purchased a replacement in month 2 for $108,000 and paid 55% in month 2. The remaining balance, 8 equal instalments, commencing in month 3. Lovely. Because I can completely ignore that, because I'm not looking at month 3. If we were doing month 2 and month 3, then obviously that statement would then become relevant. But we're not doing month 3, we're only doing month 1 and month 2. Yep, so there'll be nothing in month 1. I need to say what was purchased in, what did we pay in month 2? Right, well, it cost $108,000 altogether, and we paid some of it in month 2. We paid 55%. So the cash that we handed over for our purchase of our non-current asset is simply going to be, he says, trying to find it in his answer, 108,000 times 55%. And that comes to 59,000. Okay, now what happens in month 1? Nothing. We didn't buy anything. What happens in month 3, 4, 5, 6? I don't care. I'm not doing the budget for those. Again, please remember, we're doing a cash budget. So all we care about is the cash that is going in or out. Yeah, we're not worried about, if you were doing financial accounts, you'd put 108,000 in, because that's what it's cost you. You'd put 108,000 in, and then you would have a liability for the bit that you haven't yet paid. Yeah, but we're just doing a cash budget. How much have we paid? So, in month 3, you'll put part of the balance, and month 4, part of the balance, and so on. But month 2, it's just 59,000. So 59,000 comes in. Right, so 59, 1, 2, 3. Right, getting there. I'm going to leave the mortgage just for a minute, because the mortgage is the tricky one. So I'll come back to that in a minute. Leave the hard bits to the end. Right, VAT return. So I'll do this as number 5. So VAT return, we've got sales of 8,510,000. We've got purchases of 4,340,000, and the VAT rate is 20%. Well, if you remember, what happens with VAT is it's simply you pay 20%, the VAT rate is 20%, you pay 20% on the difference between the sales and the purchases. So all I need to do is I need to work out the net of the sales minus the purchases. And you pay over the difference. Yeah, what I have seen people do is I've said you must pay cash outflow VAT on the sales, and then you get a cash inflow VAT on the purchases. No, you don't. You simply pay over outflow the difference between them. So the sales figure was 8,510,122. The purchases figure was 4,340,122. Difference between the two times 20%. That's it. Now again, just make sure on your calculator you don't do anything stupid. So I would do the 8,510 minus the 4,340 equals, and then I'd multiply it by 20%. Depends on the calculator you've got. What some calculators will do is they'll do 8,510,000 minus 20% of 4,340, because that's the way calculators sometimes do things. Always be on the safe side. If you've got one thing minus another, one thing minus another equals, and then multiply that by 20%, just so your calculator doesn't get confused. You've got enough other issues in the exam without your calculator getting confused. And that's going to give us 834, and we did this, any VAT payment or refund will be made or received in month 1. So we are going to make a payment, so that's a cash outflow of 834,000, and there's nothing in month 2. We are not told, I know I haven't done the mortgage yet, so I'll come back to that in a minute. We're not told about any dividend payments. We're not told about any overdraft interest. So we're not told about anything to do with those. What we've got left is the mortgage. So let's have a look at the mortgage. And I'm going to do this as number 6. So in the last few months, the company's taken out a mortgage. The mortgage cost is 6 million and the mortgage was 80% loan to value. Now, what does that 80% loan to value mean? Was the mortgage has a value of 6 million times 80%, which is 4,800,000. So that's the first thing. They only borrowed 4,800,000. They didn't borrow 6 million. Right, that's the first bit. Done that. So that's done that bit. The mortgage is for a 20-year period and interest is charged on the initial balance, so the 4,800,000, at 3.5% per annum per year. Remember, per annum means per year. Payments made on a monthly basis. So let's work out what it is for a year and then divide it by 12. Just exactly the same as when we did the investment income. So we have got the interest then is 4,800,000. The interest rate we were just told is 3.5% per year, and that is going to be divided by 12 because 3.5% for the year and we're paying monthly. I don't know why I made that sound so complicated. So 3.5% for the year, we're paying monthly, 3.5% divided by 12. Again, if you need to, just be careful with your percentages. 3.5 divided by 100. That gives us 14,000. So the obvious thing then is we have to pay 14,000 for the mortgage. But 14,000 is just the interest. We've still got to pay back the 4.8 million. So we still have a capital repayment as well. We've still got to pay off the 4,800,000. And the 4,800,000 we will need to pay back. And it says we are going to pay this back over a 20-year period. All right, so each year we need to pay back 1/20th of 4,800,000, which is £240,000. So that means each month we need to pay back 20,000. Now that is something you need to be really careful about in the exam. Yeah, if at some point you've got to pay them back 4,800,000. So it's a 20-year loan. So one way you could do it is you could say, well, 20 years, 20 times 12, 20 years is 240 months. 4,800,000 over 240 months is 20,000. Or you can just do it the way I've done it. 4.8 million divided by 20 says that's how much per year. Divide it again by 12, well, that's how much per month. So in other words, we will have to pay back 34,000. And that, of course, is in month 1 and in month 2 because they took the mortgage out a little bit earlier. Right, total payments, and again, it's now a matter of just simply adding things up. Total payments, we have 8113869 and 7447,758. So 7447,758. Get rid of that. Make that a bit clearer. There we go. And now, again, it's just simply adding things up. Net cash flow 625,575 in month 1. 1405214 in month 2. Again, I prefer to just do each row at a time. Just do everything for month 1, then do everything for month 2. Opening bank balance we were given as 41600. That one we were given, and then it's simply, well, we've increased it by 600,000, so that's 1041575, and then 1041575 becomes your opening balance in month 2. We've increased it by another 1.4 million. So our closing balance is 2,446,789. So again, the idea is, it's the way this is the way I've done it. When I was looking at the investment income, the sales, etc., I just did each row one thing at a time. Month one, month two, month one, month two, month one, month two. It was only when I got to the very fine, in fact, even then, I would do the net cash flow for month one, month two, do the opening bank balance. This was the only bit where I actually did it down the column. So for me, it's just easier. Just do each row at a time. Don't try and do all the way down month one and then come back and do all the way down month two. I think it's just harder. And I'm a big believer in doing things easily. So, I hope that you have found that useful. I look forward to seeing you another time on a future edition of LSBF TV, working through a different task. Until then, good luck with all your studying.